Recording in progress.
Hello, everyone. This is Dr. Financial Literacy. How are you doing today? We got a juicy topic for today. Let's go ahead and get started. Before we get started, please hit the like button or the subscribe button so you'll get new videos when they come available. Today we're going to talk about a couple of things in terms of a strategy I'm using to increase the money that's available to me for the HELOC. Look again at the properties itself, and also just be aware of the HELOC and the objective and the cost is really on a daily interest rate compared to a 30-year fixed rate, and how you can kind of achieve that and do better. So let me share my screen. All right, so the first definition we'll look at is, what is a home equity line of credit? A home equity line of credit, also known as a HELOC, is a line of credit secured by your home that gives you a revolving credit line to use for large purchases or expenses, or to consolidate higher interest rate debt or other loans such as credit cards. So I'm attempting to use a HELOC to consolidate the three properties into one, and also use what's called a pocket paycheck position or strategy, where I'm dumping my paycheck and other forms of income that I have into the HELOC in hopes of paying off the mortgages within a shorter period of time. I'm shooting for trying to pay off 154,000 in maybe 3 years, and we can see if it gets done. All right, so just to recap in general what we have, I have a total of 3 properties. These are the current balances, about 28, 35, 80,000, so about $143,000. The appraised value at 225, 217, 259, so a total appraised value of 701,000. The years remaining, 19, 16, and 19. They're located all in the Atlanta metropolitan area. With those two numbers as the first definition point out, equity. So I have approximately $558,000 in equity, but I'm only looking at using the equity in one property in terms of trying to pay it down sooner. I had hopes of getting what's called an all-in-one loan, or mortgage, which replaces a fixed mortgage with a home line. With a line of credit that you pay in. You can put your check in, you can put other deposit in, and the all-in-one mortgage wipes away the mortgage 30-year fixed mortgage. The advantage that they say is that in general, you get to pay down on the daily balance, the daily interest rate. So that's important compared to a fixed interest rate. And the con of it, you could get a higher interest rate. You could lose your property on a home equity line, or you can use it on the fix. So it all comes with consequences. As a reminder, I am a political economist. I look at politics and government and economics and how they interact. I'm attempting to use a HELOC and look at velocity banking, trying to look at it all in one, looking at a HELOC, but trying to do an experiment for the community so that they have real world experience, something to look at in terms of the data and the information, and can ask questions or give me a call. So I'm not a CPA, I'm not an attorney, I'm a political economist and a gentleman just on a YouTube, just providing information to the community so that they can make some of the decisions if they like. Now, on the properties, the 3 interest rates are 5.75, 6.0, 6.88, and 6.21. As I mentioned in the previous videos, there's a float and a high in terms of the HELOC. The highest that the HELOC can go for the one that I'm looking at is 14%. So I have budgeted 14%. So no way I should be caught flat-footed or be surprised. I'm looking at, again, just saying, okay, I'm gonna do this thing at 14%, and I'll make sure that I make a payment each month into the HELOC at 14%. The lowest it can go, I think about 5%, and they're actually offering me 9.36%. So I'm budgeting at the highest it can go, so there won't be any surprises. As I mentioned earlier, one of the key things about the HELOC is that average daily balance, and you're paying more down on the principal than the interest. The HELOC gives you an opportunity to kind of flip it on its head. There's a draw period in the HELOC where you have time to draw and use the money, but then at a certain time, I think it converts to a fixed rate, and then you're locked in, and they slowly decrease the amount that's available to you. The HELOC that is being offered to me is 48 480 months, or I think that's 40 years. So that's a lot of time to hold on to the money and use it. Another positive about the HELOC, if I get it, then I'm able to keep using it up to a period before they start decreasing it. For other purchases, if I want to put down on another investment property or home, I can do it without necessarily have to go back and requalify. So let's look at calculating just interest in general. If we look at the first one, a bank CD at 12,000, and we're going to look at the interest that's calculated, your annual return will be $360 for 1 year. And let's look at that return as if how much you're getting per month at 12. That's about $30. And per day, because we're looking at the annual percent per day when we talk about in terms of HELOCs. So I'm gonna just say there's about 30 days in each month. We know that there is more and less in general, but we're just gonna do an average. So, wow, is that $1 a day? I have to go back and do the math. Okay. If we look at an automobile at 18%, 18,000, and they give it to you for 4.5%, we want to convert that to a decimal, which will be 0.045. Multiply that by 18 yearly as your balance comes down, about 810 per year, about $67.50 per month, and a daily rate of about $2.25. So when looking at a HELOC, they look at your average daily balance every day. So if I start off with $100,000, I put all of my paycheck in and maybe bring it down to 95,000. Between that, each one of those days that I'm able to bring it down, even if I put $5 in the bank, $10 in the bank, it lowers your principal every day, and your interest is calculated on your principal. And again, I'm shooting for 14%, the highest that it can go by law, and it can't go any further than that. So in looking at the 3 homes and looking at my average interest rate across the 3, about 6.21, multiply that by 145,000, that should be 143. So I'm paying about 8,000, a little close to 9,000 per year in interest for the 3 properties that I'm carrying. Monthly, about 740, and daily, about 2467. So the thing about this is that just wanted to show what it looks like in general. Now let's look at if I change this to a HELOC and what I could be paying. At least for the 4 years, if I just make the minimum interest payments. Let's change this to 14%. Still 143. And change this to 14%. So that's to be about $20,000 a year, almost triple what I'm paying for right now. The monthly payment, the highest that it can go, because I'm willing to accept at 14% and pay, but they're actually starting me at 9.36. Now, according to the disclosures that has already been provided to me, that initial rate can change within a 24-hour period. It can change daily. So by preparing myself to pay at a 14% interest and making a budget, then I'm pretty much just covered 100. I'm covered in the sense that I know that this is the highest. So anything below 14%, it should be gravy for me, because I've already built in the highest amount that it can go. Now, according to the fixed rates that I have, they basically stay the same over the next 30 years that I've had them. So there's necessarily no change. I can pay early on the principal in general, but from what I've seen with the HELOC, it can be a better strategy to pay it down. And I'm hoping that I can use this strategy even at 14% to pay it down, because it's the average daily balance that is placed on it. So the more I can put in and deposit, the lower my principal comes down quicker. Okay, now another strategy that I'm using is I've increased my take-home pay by increasing the number of exemptions that well, not exemptions, because I think they changed the law, not so much as exemptions. I got to go back and read that, but I changed the rate at which how much they'll be taking out of my paycheck every 2 weeks. So every 2 weeks after getting paid after taxes, I was bringing home in 2023, 1617. So that's every 2 weeks, and then $3,234.94 a month. Now I've increased that to whereas I'm bringing home 1686.70 a month. I mean, bi-weekly. A total of 3,373. Now, that's $138 difference and $1,661 a year. Now, for some people, that may not seem like much, but I will be using that inside of the HELOC every month. So this is just one way of increasing the deposit. And at the end of the year of 2023, when it's time to pay Uncle Sam, I just cut Uncle Sam a check from the HELOC, and we're even Steven. But I was also able to reduce my principal every month by $138. Again, this is a strategy that I'm using personally, so I'm not telling anyone anything that I'm not doing myself. So this is a change that I made in my check, going from 1617 to going to 1686, using that $138 difference per month as it builds to pull down the principal, and hopefully that'll help me pay off $145,000 mortgage in 2 to 3 years. So hopefully I just show and prove. Again, thank you very much for stopping by. This is Dr. Financial Literacy, your local political economist. Just wanted to show you what else I'm doing. This is day 15. Please continue to follow along. If you have any questions or comments, please leave them in the bottom or shoot me an email. I'll be more than happy to try to answer them. And I'm just trying to work this thing out so that you can see what I'm doing. You can watch a number of videos on the internet that is indicating that you can pay off your mortgage to 5 to 7 years. Very few, if any of them, say 2 to 3. But I'm really trying to pay down 145,000 down within 2 to 3 years on the mortgages that I have. So again, thank you very much for joining me. I'm super excited. I'm still waiting to hear from the credit union. Called them today, and they say that they're in the verification income stage, and hopefully I can get a large amount on the HELOC on one of the properties and implement this strategy in general. So definitely continue to follow, but anything that I can get from the bank, a 30,000, 40,000 HELOC, I will use that as a strategy to pay down the debt and seeing if it can be done in 2 to 3 years. All right. Thank you very much. Y'all have a great day.